Some see it as a throwback to another era, but a group of 20-something Calgary engineers say they heartily recommend membership in an investment club after running one for 3 years. A well-worn copy of a Canadian Investment Institute book called How to Start and Run an Investment Club for Fun and Learning, spotted in a second-hand bookstore 4 years ago, gave founder Taylor Merritt, 29, the idea to create the Hillary Club. The $6 book sparked an online invitation to his friends to ask if they were interested. A group of 4 soon started meeting weekly over breakfast for stock talk sessions. About a year later, the decision was made to take the plunge and start investing real money. A partnership agreement was drafted and registered with provincial securities authorities. The members voted to donate 5% of net income to charity. A lot of that first year was just feeling out everyone's risk tolerance and their appetite for some of these different kinds of investments, said Craig Merritt, 30, Taylor's older brother and a founding member. When you mix money and friends, you have to be very careful because you could lose both, chimed in Taylor. 2 more members, also unmarried male engineers who work in downtown Calgary, joined later. The group got together once a week to pick investments but also met for non-investing activities like hiking in the mountains. It's difficult to get a handle on how many investment clubs operate in Canada. They are regulated by provincial securities authorities, but neither the Alberta Securities Commission nor the Ontario Securities Commission keeps track of how many there are. Brothers Taylor Merritt, Wright, and Craig Merritt are members of an investing club in Calgary, Alberta, Tuesday, October 31, 2017. CP spokeswoman Nimranawana said the OSC recommends that members seek legal advice while setting up such clubs because they must comply with rules regarding prospectus, dealer registration and fund manager exemptions. Tom Graham, the ASC Director of Corporate Finance, said his organization gets a handful of inquiries about clubs every year, but they mostly operate under the radar. In other words, he said, there have been no complaints filed. He said there's a long list of prohibitions designed to ensure the clubs aren't fronts for investment businesses. There can't be more than 50 members, the clubs can't borrow money from non-members, no member can be paid for his services, and there are no preferred shares. Proceeds must be distributed based on the amounts contributed. Tax expert Kim Moody of Moody's Gartner Tax Law said he recommends investment clubs structure themselves as partnerships. If it's considered to be a partnership, any gains or losses would be pro rata, paid out based on contribution share. That's typical, he said. He said each partnership must file annually with Canada Revenue Agency, but the capital gains and losses are claimed by individual members. An investment club can also be organized as a corporation, but that gets more complicated, Moody said, as it would have to pay corporate taxes if there are profits and distribute funds through dividends to investors. The Hillary Club was dissolved by mutual agreement at the end of the second quarter this year.